You guys watching this video will have almost certainly seen a number of crypto day traders on Instagram and YouTube and other social media, and a lot of people have been calling VeChain a stablecoin, or much worse, using terms that I probably shouldn't repeat on YouTube. And right now there is a lot of negative sentiment around VeChain, and to me I really can't believe the times that we are living in as far as the financial markets are concerned. Although of course I didn't live through them, I have read a lot about the Roaring Twenties, which led up to the Great Depression and the infamous market crash of 1929 to 1932. And I don't want to sound like a merchant of doom and gloom, but it really does feel as if the descriptions and characteristics of the 1920s are alive and well in today's market. It seems as if the crypto day trading fake entrepreneurs online are equivalent to the scammy salesmen who went around door to door selling stocks to people who had no idea about what they were buying. And one of the most overlooked characteristics of an irrational market, a market where common sense has no place amongst the popular crowd of the time, is that all or almost all of the people claiming to be able to teach people how to trade cryptos or stocks are always focused on the price, and they are always focused on trying to tell you that we are on the verge of another explosion. And the whole market culture that we have today is built around price and trading many times per day and being impatient and jumping from crypto to crypto looking for the next big gainer. And by the way, if you're enjoying this video so far, do me a favor and subscribe to the channel so that we can keep growing and I can spend more time producing these videos. And some people may call VeChain a stablecoin, which I don't think is an insult at all, as after all, stability is one of the things which potential users are looking for in any crypto. And so I'd much rather have a long period of fairly stable increases in value, rather than short bursts followed by deep crashes, as these types of coins only attract speculators and very few genuine users. Which means that while everybody seems to be making money, all is good and well, but when the market crashes, which it always does eventually, all of the speculators will stop trading with each other. And do you think that it's going to be the dogecoins or the VeChains of this world who are left standing in a favorable position? I know what my answer to this question is. And the main criticism of VeChain from this crowd has been that the price has not been rising fast enough. And actually we have seen in excess of 2,500% worth of gains in the last year in VET. And you know that there is something seriously wrong with the market when 2,500% worth of gain, a gain of 25 to 1 in just 1 year, isn't enough for the consensus. And this is actually a growing frustration of mine with the crypto market, but actually the consensus can mock VeChain and similar projects as much as they want, and they can call it a stablecoin or whatever else they want to call it, but at the end of the day, most cryptocurrencies are going to die over the next few years. And the chances are the ones that will survive will be the ones that have value and fundamental strength, not the countless thousands of cryptos which are propped up by speculators all trading with each other every day. And the reason that most cryptos in existence today will have to die over the coming years is simply a natural market function. Whenever we have a new technology in its early phases, for example blockchain, naturally there is a huge level of growth which brings in a large number of projects or companies into the space, and then people see that these projects and companies are doing very well, which incentivizes them to join in, and eventually we get to a point where there are too many people in the market in terms of competition. Right now there are roughly 9,000 listed cryptocurrencies trading publicly, and naturally most of them will have to die to make room for the Amazons and the Facebooks and so on. Just like during the dot-com boom of the 1990s, in crypto today there are too many projects in the same space and too many useless ones which aren't independently viable, meaning that they couldn't survive in the long term without speculative demand and speculators pushing up the prices. Anyway, that's all for this video. Thanks for watching, and if you're not yet subscribed to our channel, then consider doing so for all of our new content.